and welcome to this special edition of Markets Daily. My guest today is CoinDesk Indices Head of Product, Andy Baehr. Andy.
Great to see you.
We don't often get to do this show, just the two of us.
I know, we had to come all the way to Dubai to get this done.
We had to come all the way to Dubai to get this done, but here we are doing it. We're here for an OKX event, and we were talking about the news while we were preparing for this. OKX launched in the United Arab Emirates, and they launched with something that is kind of incredible. They're trading more than 280 cryptocurrencies and 480 trading pairs. Talk to me a little bit more about why that is remarkable in the current regulatory environment.
I mean, hearing the story, and of course we're hearing it right from the OKX's mouth here, that they worked for this for 3 years. They worked with Baehr. They made a lot of progress, and launching both a retail product and an institutional product, derivatives for institutions and qualified investors. But right out of the gate, hundreds of tokens and even more hundreds of pairs. Plus, their retail customers will be able to fund with local currency and trade Bitcoin, Ether, and Tether in local currency. So it looks like, unlike some of the other jurisdictions, the regulator is promoting an idea where this regulated exchange is really interesting enough and provides a varied enough product to get them to use it and to maybe offboard from some of the other providers that they've been using before.
Do you think this is going to set some kind of regulatory precedent's not the right word, but do you think regulators in other jurisdictions are
jealousy
going to look at this and think, oh, maybe we should do that. Right. Maybe we should start allowing exchanges to offer these products.
Right. It's an unprecedented development, I think, both to attract the industry here and to invite investor protection. Centralized crypto exchanges need retail flow. If it's institutions trading versus each other, it's never very interesting. So you kind of need the retail flow coming in. This is certainly the most, impressive out of the gate offering we've seen so far. We keep our eyes on jurisdictions like Singapore and Hong Kong, which are moving, a little bit more patiently. Right? No, I haven't seen anything like this, so it's pretty exciting. Of course, we're in the midst of the glitz and glamour of tonight's event, so it's hard not to get excited, but it really indicates that a footprint for Dubai for the industry is here, and the regulators are behind it.
Now, this is a question and a point that I think has been beaten to death over the past year, but I gotta just say it again. Do you see firms moving from the U.S. to these jurisdictions? Do you think we're going to start seeing that? We're going to start seeing capital flow from North America over this way. And what does that mean when we're watching the crypto markets?
We've seen it for a couple of years now, where firms that were onshore in the United States trying to trade a balanced digital asset book that had lending, that had perps access, that had borrowing, that had OTC connections around the world. A lot of them had to move offshore just to continue the business they were doing. Money and love find a way, right? They will go where gravity takes them. Certainly, this kind of activity for OKX, which we heard from the head of legal and compliance, they have 500 people in legal and compliance talking to regulators around the world. That's a serious investment, especially one that would have started in the depths of crypto winter. Firms will follow where that capital is available and where these business opportunities go. So, capital markets take a lot. They take centralized exchanges, custodians, hedge funds, other service providers. Dubai's definitely laying out the welcome mat.
I mean, if you're thinking about this from someone who watches the crypto markets perspective, or an investor, should these people be looking more closely at projects that are going to these more regulatory friendly jurisdictions?
I think any time an exchange offers a broad array of assets to retail in a regulated way, that's good. I think that just helps adoption, even if incrementally. For the people who are in crypto 95% of the time, but 5% of the time, who might be looking at ETFs or other ways in, we always like our CoinDesk 20 index because it gives them instant diversification and access. It's interesting, since the Fed's interest rate cut, the altcoin market has kind of sprung back to life a little bit after the kind of sideways summer.
It really has. Yeah. It's been the only thing keeping people alive. Right. People have a pep in their step because of the altcoins.
I think that's totally right. It was a Bitcoin summer, and I think after talking about the ETFs ad nauseum and thinking about oh, the Mt. Gox supply and the German and U.S. government supply, it just became a very kind of well-worn out story. And so it was great to see on September 18th, which was 6 months and 5 days after Bitcoin's all-time high, for the alts to step out and CoinDesk 20 to outperform Bitcoin by 4% in the week and a half after that. So it's time to look at stories again. We think, not overnight, but more and more liquidity and educated money will flow into protocols that are doing well.
Why do you think that?
It's if you pave better roads, you'll just get better traffic, right? If you actually have a jurisdiction where retail can access hundreds of tokens that didn't exist 6 months ago, I think you'll get more interested, committed, educated investors. If it's in an area that's also going to house a lot of the business in a fairly, reasonably or relatively tight knit community, can only be good for the market. So liquidity and greater adoption are, those are the two big things that help our industry move forward and help prices move to where they should move. And that helps savvy investors kind of have more confidence about their investments doing what they think they should do.
Hey everyone, did you know 52 million Americans own cryptocurrencies? That's not just a number, it's a movement, economic, social, and political. Decentralized finance, blockchain, and digital currencies are more than buzzwords, they are the future. This November, it's on us to show up and step up. We need to protect crypto to ensure it continues to fuel innovation and freedom for our families and businesses. Don't let this opportunity slip by. The future of crypto is on the line. Make your voice heard this November and pledge to vote now at standwithcrypto.org/pledge. I have two other big things we have to talk about. Sure. One is the election. The other are the Fed meetings coming up at the end of the year. We talked a little bit about both with some of the guests here at the OKX event, but what are you watching for? How are you expecting the markets to react? Do you think we're going to get 2 rate cuts at those meetings?
We'll go along with the mainstream thinking on 2 rate cuts. I think that we hoped for maybe 1% between the beginning and the end of the cycle. So that's still, I think, on the table after the employment report from last week. I think people are a little bit less, I think it's a little bit less likely they're going to get another epi shot like we did, on September 18th. But there's that. The election is less than a month away. It's looming. I've heard some crazy estimates that Bitcoin is up near 100,000 in a Trump victory and down near 40,000 in a Harris victory. Both candidates are clearly running towards the center now to grab, any kind of members of the electorate that were undecided. So we'll see. I think by the end of the first quarter, one way or the other, the smoke will clear, progress will be made, and it's just going to be a matter of patience, I think.
It's funny you say that. I know you're not allowed to share your opinion, but I'm allowed to share my opinion these days on this show. And I really think regardless of who wins, the Bitcoin is going to react maybe a little bit, but it's going to level itself out.
Bitcoin is going to do what Bitcoin does. It's going to do what it's always done over 15 years. It's either going to go away or it's going to go to 1 million, right? So it's every day that it lasts is another day that it's proving that it's more likely to be the former case. It's the other tokens. It's the battle of the L1s, the battle of the L2s, the service providers, DeFi, all the Web3 projects. I think that if Bitcoin finally kind of finds a steadier trend, there'll be more confidence in those. There'll be better liquidity in lending markets and secondary tokens. CoinDesk 20 is trying to create liquidity in top 20 tokens all at once. We think that helps the market out quite a bit. So I think if you're optimistic about Bitcoin, it'll be a great time to think about how else you want to diversify your portfolio and not miss out on some of those faster growth stories.
You mentioned L1s, L2s. DPIN was a big narrative this year. Is there any specific narrative that you've been watching closely?
For the most part, it's easier to look at the large, I guess, sellers of bait than the actual people fishing, right? So think about Uniswap, which is a CoinDesk 20 member. It had some good news today. And companies like Chainlink, which are bridging information from the traditional world as an oracle into the DeFi world. These kind of things are going to benefit centralized exchanges too. They're all going to benefit, as even Ethereum will benefit if there's a lot more stablecoin activity. even if a lot of that activity is taking place on L2. So we just think, look, the infrastructure has been built now for several years to support all these great ideas. So we like thinking big, we like thinking CoinDesk 20 names, and we like thinking of what are the platforms going to be that are going to support all these great innovations.
Well, really quickly, for folks who are just learning about the CoinDesk 20 now, what is it?
CoinDesk 20 is the top 20 token. It's a great index. CoinDesk Indices launched this index back in January. It trades on perps at Bullish and on Bit Exchange. It's available in a bunch of funds now. But it's a great thing to watch how top 20 tokens with Bitcoin and Ether weights capped. So you get half majors, half alts. It's a great way to just keep an eye on where the alt market is relative just to the price of Bitcoin. So it's going to be the most traded, the most referenced, and the most benchmarked index in the digital asset class.
Andy, you're the only guest I've ever had on this show who I let promote something like that.
I appreciate it.
Andy, thank you so much for joining Markets Daily today.
Thanks, Jen.
And thank you to our audience for watching. If you love watching all of the podcasts on CoinDesk, subscribe to the CoinDesk Podcast Network. That is on all podcast platforms. And if you like watching, you can subscribe to our YouTube channel. Give us a thumbs up. That's it for Markets Daily. Thanks so much for watching, and we'll see you next time.